Hello, everyone. My name is Efren Calderon, and alongside is Alex Shade. And today we are presenting our financial analysis of Nvidia. This presentation will walk through the company's capital structure, bonds, IPO history, and an overview of its stock performance and investment outlook as of spring 2025. To begin, let's look at NVIDIA's capital structure. We examine both market value ratios and leverage ratios to assess how the company finances operations and growth. The company currently has a strong market capitalization of around $680 billion, which reflects high investor confidence. From a leverage standpoint, NVIDIA maintains a relatively balanced debt-to-equity mix, showing that while it does take on some debt, it relies heavily on equity financing. This positions them well in tech-driven industry while innovation and investor backing are crucial. Now let's take a look on slide 3 on NVIDIA's bond activity. We found a bond issued with a coupon rate of 2.85% maturing on April 1st of 2030 with a par value of $1,000. This bond doesn't include any call or sinking fund provisions and it's not convertible. This means investors are locked into the bond until maturity without early redemption options or conversions to equity. Overall, it's straightforward, low-risk investment offering fixed income, which makes it attractive to conservative investors.
So now we're on to Nvidia's stocks. Their current market cap as of this month was $680 billion. And then the IPO we selected was from January 22nd, 1999, which is when the company first went public, and they issued 3.5 million shares at $12 a share, and the launch successfully enabled early growth. And then for the stock split history, there were 6 total splits, including a 10-for-1 in 2024. Now we have the return on investments from buying the stocks. If you bought the stock at the IPO date, which you would have bought it at $12 per share if you bought the IPO, or for 4 cents if you bought it from somebody after they bought the IPO, you would have made it $110. If you bought the stock 3 years ago, you would have made $89. If you bought the stock 2 years ago, you would have made $83. If you bought the stock 1 year ago, you would have made $24. If you bought the stock last month, you would have lost $11. If you bought the stock a week ago, you would have lost about 50 cents. For investment advice, Nvidia, their bonds are good. Nvidia is a large enough company and is liquid enough in their assets that they can consistently pay off their bonds. For their stocks, at least in the short term, it doesn't look too good, along with the rest of the market. But over the long term and medium term, they've been pretty solid as the industry continues to grow. Lastly, here we have our 2 sources, which are just Yahoo Finance and then TradingView, which is what we use to find the information for the bonds.